Welcome back, everybody. It's good to have you to another real estate market update for the greater Milwaukee area, this time May 2025. We're right in the middle of the spring market. I'm super busy, but I'm always excited to put together a May market update because this is the first time of the year where we already have 4 months worth of data to look back on. And so I can kind of see how the year is shaping up and which direction we might be going for the rest of the year. And then, of course, we also have to talk about the state of the economy. There are a lot of recession concerns floating around. And since 2008, a lot of people seem to automatically associate economic concerns or recession concerns with a downturn in the real estate market or even a housing market crash. And so I want to take a look at that today and everything else that you need to know. If you're thinking about moving in the future, this is the stuff that you need to know. First of all, let's talk about the news because this is one of my favorite saying about headlines. They do more to terrify than to clarify these days. When you look through the news, doesn't matter if it's newspaper or online social media, everybody wants your eyeballs. And so there are a lot of really catchy headlines out there. Everybody's trying to get you either outraged or upset or really concerned and worried in order to, get your attention. And if you follow me for any amount of time, then you know that I'm a data guy. And so that's what we do here. We take a very level-headed look at data and information and also trying to understand why are things happening the way they're happening, because I think that makes for a much better decision making. And that is very important, especially when it comes to the real estate in your life. As you know, money and emotions don't really mix well. So, don't think for a second it doesn't get under my skin, here and there as well. And what do I do if it gets under my skin and I get worried about what's going on? I look at the data, and that's what we want to do today. So as always, let's take a look at the latest data from the MLS. This is the 4 counties of the Milwaukee metro area. And the first number I always have here is inventory, because inventory is really the single most important metric in real estate because it tells you where the market is and in what direction it's going. So in April, we had 1,571 listings on the market, and that's up 37%. Now, without the context, you could say, oh my God, inventory is up 37%. What does that mean? Normally, we don't see increases that are double digit, but yeah, they are. First of all, this is really good news for buyers because we desperately needed some inventory. And secondly, if you look at the historic numbers below, you can see before COVID in April 2019, we had about 1,000 more. We were 2,500, and in April 2015, 10 years ago, we had almost 5,600 listings on the market. So the 1,571 is an improvement over last year. This time of the year makes it a little easier for buyers, gives them more choices, but still a very, very low inventory. Sold units are very tight. So between the economic situation that we have going on, and I think there are some concerns with that, but also what's going on with mortgage rates, that's holding back sellers because sellers don't want to put the house on the market and, say goodbye to their mortgage rate that they locked in years ago for under 3%. And then also the lack of inventory, quite frankly, on the buying side, only 945 units. So that is a very, very low number. It's a very narrow market. I cannot recall last time we have seen such a low number of transactions in any given month. And that happens at a very high velocity. So just 5 days on market, that means a lot of the really interesting and hot listings are coming on the market on Friday and are sold by Sunday usually. So on average, you get 5 days, and you can see the historic numbers below. Median sold price with that market dynamic, no surprise, we're up again $385,000 now for a median home in the 4-county area, up 8.45%. And if you check the historic numbers below, you can see in the last 10 years, real estate has basically doubled in value here in our local area. What are some of the market trends? The market overall has remained very, very competitive, as we have seen it over the last few years. And it seems like it's gaining momentum. But on a more short-term level, I'm seeing that buyers are getting also very critical on price and value. And I think that is important to recognize because not everything is selling, but what is selling very hot. We have seen more cash offers in the last 4 weeks. I think this is happening because we have some volatility and uncertainty in the stock market. So especially at the middle and higher price brackets, there seem to be a lot of people that are taking money out of the stock market. They don't want to expose it to that volatility at the moment. And the mortgage rates are relatively high, which also gives another incentive for them to say, you know what, I'll take that money out of the stock market and I, buy the next house with cash. And then maybe I'll finance it later and put the money back in the stock market or whatever the line of thinking is. But that is clearly a trend that we have seen over the last few weeks. We have seen a number of deals that went as high as 8 to 12 offers. We just discussed it on our Monday morning team meeting. We had 3 accepted offers this weekend, and 2 of them were this competitive. With one had 8 offers, the other one had 12 offers. Congratulations to our clients, by the way. We got them under contract. But that is one end of the spectrum. If the list price is pushing it more to the upper limit at what is possible, you might see only 1 to 3 offers. So they don't go that aggressive, don't go as competitive anymore. And this does not mean that every listing is going to sell over list price. So there's still a lot of negotiations going on. A lot of deals are closed at list price or below. We looked at that in a previous video. You've seen the data. And a lot of listings are not selling at all. So overpriced listings are being completely disregarded by the market. Buyers are very educated these days. And I just had to look this up. 859 listings expired this year in the 4 counties without a sale. 859. Put this in context here with the 945 that got sold in April. So we lost almost a month worth of possible sales because a seller or an agent was overconfident. They misread the market, put it out too high, and then they had to backpedal, eventually expired. And at that point, the damage is already done, and most likely you will not be able to fully recover from that. So doing it right the first time will actually get you the most amount of money. On that note, if you're thinking about moving, we should definitely talk. Did you know that over 60% of all buyers are working with the first real estate agent they talk to? And for sellers, it's over 70%. They're working with literally the first agent they talk to. Obviously, this is for a lot of people one of the biggest financial decisions, a lot of money at stake. So common sense is telling you you should talk to more than one person before you make the decision. Here's my invitation to you. I can only help you if you reach out to me. You have my email address here. A lot of people prefer sending me an email, but you can also you can also call me. Just don't be surprised if I actually pick up, because that's what I do. And if I miss you because I'm in a meeting, I'll call you back as soon as I step out of that meeting. So this way you talk to more than one agent, you have the information and the data that you need, so you know who can possibly do the better job for you, and then you can make an informed decision. Sounds fair? Okay, moving on. So let's talk about the national market. And here we have really a tale of 2 markets. It's a major shift, probably the biggest shift I would say that we have seen in the last, 5+ years, because, we have been moving very much in the same direction as a country. You can see that here on the Zillow heat index map from 2022. So this is 3 years ago. And no matter where you look on the map, all of these markets were red hot competitive. And I have here the updated map from March 2025, and look at what a change. A lot of these markets went from red hot, especially here in the south and the Sun Belt, into cold and really ice cold here. So a major shift in those markets. And the only 2 big markets that are still going strong are the Midwest and the Northeast, a little bit on the West Coast here as well. So the big question is, why is this happening and why now? Let's take a look first at what's going on with prices and how Milwaukee is stacking up with the national average. You have the national average real estate price development here in red. So that was the crazy unicorn run that we have seen in the COVID years. And now the national average home prices are kind of trending sideways, I would say here. Milwaukee in green has been relatively stable. You see here we have a very pronounced up and down, very strong seasonality between spring market and winter market, but a relatively stable trend. And the differences between individual markets are very strong. Milwaukee is kind of catching up, when you at the big picture, and prices are getting closer to the national averages, which I think is also not a surprise, because when you travel around a little bit, Milwaukee is not a below average city. So why should our prices be below average? Let me give you an example. I had a phone call with the client yesterday, and he is actually at the moment in Scottsdale, Arizona. And I always throw Texas and Florida under the bus here. I've done a video a few weeks ago about it, but I want to give you a different example here. So let's compare Milwaukee with Scottsdale, Arizona. Milwaukee market as of April 2025, a very, very strong seller's market. So very competitive, difficult for buyers, very good for if you're a seller. Inventory is super low. This is data from RPR. It reads out here at less than 1 month of inventory. Sold to list price 103.8%. So most listings are selling over list price actually very quickly. And then still a relatively low median sold price, but a 13.46% increase. And this is, by the way, Milwaukee County. So that's a little different data than I have because I look at 4 counties and average them out. So compare this with what's going on in Scottsdale, Arizona. We have less than a month of inventory. They have over 10 months worth of inventory. So when you're driving around there, there's for sale signs everywhere. Buyers have lots of choices. They can look at a lot of property and they can really hunt for a good deal. And you see that in the sold to list price ratio that is way down compared with our 103.8 here. Takes a lot longer to sell a house and the price is a lot higher, still $1 million for a median sold price, but that is down almost 7% month over month. So this is the discrepancy that you see in the markets, and it's really driven by inventory. So we like measuring inventory in month of supply. If that doesn't make a lot of sense, think of how much milk you have in the fridge. And if you have enough milk for 2 weeks, then you have 2 weeks worth of supply. But if you have a lot of kids that are all drinking milk, then the 2 boxes that you have in the fridge may only last you for a couple of days. So it depends on how much you have and how much the demand is, how long that will last you. And that's kind of the same thing here with month of supply. And we have here in green Milwaukee. So we're starting out here in 2019. These 3 markets were basically at the same range. Milwaukee was relatively stable or remained stable here. And inventory is not really increasing because buyer demand is just, as soon as listings come on the market, buyers are taking it up. Now, when you look at the red line, that is US average, you can see in the last years, inventory on a national level has been increasing. So that's why we're seeing the prices kind of plateauing out and going sideways. And here in blue, you have Scottsdale. So obviously they're in a completely different zone when it comes to inventory. So inventory is one of the drivers, but you also have market psychology. And I was trying to find a metric that will give me a day-to-day reading on what's going on with the Milwaukee real estate market. As you know, real estate is, compared to the stock market, it really moves at a glacial pace, so very, very slow. We have a lot of leading indicators that tell us this month what's going to happen next month. But with the changes happening so rapidly in our economy and in the stock market, I want to get an idea of what's going on day by day. So what we've started tracking here is accepted offers per day in the Milwaukee metro area. And the orange bars here, that gives you the weekends, and that's kind of a day-to-day readout. How many people have written an offer, got their offer accepted, and went under contract. So you can actually measure that on a daily level. And I find that super interesting. It's a little bit easier to see if I aggregate it here by week. That's the same data. The white line that you're seeing here is total inventory. So this is March, we got April here. So new listings are a little bit less than what we already were, but still on a relatively good pace. And these are the accepted offers. So when the stock market crashed here early in April, we saw a little bit of a dip, but not very much actually. And the last 2 weeks have been relatively strong, the strongest so far in terms of accepted offers. So buyers are not really deterred by what's going on at the moment in the media, in the press, and generally the concerns about the economy. We are just not seeing it. How is the Fed looking at the whole thing? Most economists are expecting the Fed to cut rates probably 3 to 4 times this year. You see this here in the green, but that's already a little bit outdated. This is a week old. Jerome Powell was interviewed yesterday on May 7th, and he said they're not going to change rates. They're going to leave them as is. He's not going to lower them because he's still worried about inflation, and he's not going to increase them because the job market is strong and the economy is strong. So he's going to leave them the way they are. I would say we can probably expect 2 to 3 rate cuts later this year, but nothing immediate. And that also, as you know, has nothing to do with mortgage rates, because the Fed does not really control mortgage rates. That's controlled by the capital markets. If the Fed is cutting rates, that is impacting consumer loans like credit cards and car loans and that sort of stuff. So it stimulates overall the economy, but mortgage rates are set by the capital markets and are actually by the 10-year Treasury bill. So you'll have to look at the bond market. And we're kind of trapped there because investors are a little bit worried that inflation is going to come back, so they're demanding a higher percentage rate on the bonds, and that is also what keeping mortgage rates relatively high. Rates are not great, but we have already seen worse. Back here we are now at about 6 3/4, and that's kind of the direction that we're heading. So here I have the latest forecasts for the end of the year. And the average of all 5 here is 6.39. Most optimistic is Wells Fargo. They're expecting 6% to the end of the year. So basically where we're at right now, maybe a little bit lower. But mortgage rates and capital markets are incredibly complicated. There's like 20 geopolitical factors that impact the bond market, and that is really driving the mortgage rates. So they're incredibly difficult to forecast. But the consensus is that maybe we're going to see rates coming down towards the end of the year, but not in a meaningful way. There is also that notion that a recession is generally bringing down rates. So we have here historical data from the recessions from the last, 50 years basically. And on average, in the last 3 or 4, mortgage rates came down maybe about 1%. This is different though, because now we might, if the worst case scenario happens, what some of economists are fearing is that we could go into an economic recession, meaning a downturn, and at the same time having inflation. That would be a stagflation. So that would be a scenario that we haven't had here in the last 50 years. That's why I'm saying I don't even guess anymore where mortgage rates are going to go. It doesn't look like there's going to be a major change. So whatever you're planning on, I would just consider that rates stay right around the 6.5, 6 3/4 mark where they currently are. Now, here are the latest forecasts for price growth. So real estate prices, home values in the US for all of the US. This is the very latest data. So we are not seeing home prices go up as crazy anymore. You have seen the maps before. A lot of the US markets are cooling down. So this is, of course, impacting the average. So the blue bar gives here 2.3%. That is the average of all forecasts. The most pessimistic one is actually Zillow, who came out a couple of weeks ago with 1.9% negative. So for all of the country, they're expecting home prices to go down 1.9%. That's good news for buyers, good news for home affordability. That will help a lot. But it also stresses that you really have to look at the local market, because for somebody in Scottsdale or in Miami or in Fort Lauderdale or in Austin, Texas, they are probably going to be looking at red numbers this year. So the 2.3% increase is not going to be applicable. And for us here in Milwaukee, it's also not correct, because the way things are looking, we are headed more in the 7-8% direction that we have seen relatively stable here in Milwaukee for the last 5, 6, 7 years actually. So looking back at the Milwaukee market specifically, here's our inventory. As expected, we're in April here, or we were in April. Inventory listed in April is up. We had about 1,400 new listings, hit our metro area here. So this was very welcome. We needed that inventory. I think May is going to be a little bit higher, maybe around 1,600 units. But then we may have actually seen the peak for the year. You can see here last year, June, July, then a little peak in August. Back to school time is usually a little bit more lively. And then we're kind of coasting towards Thanksgiving. And then we're headed back into the winter market. So that is following a very, very predictable curve. We see this every year. And the same thing is what we're seeing here with the list to sale ratio. So that's telling you how competitive the market is. We are now at 102.3%. So on average, people have paid 2.3% over list price. That means a lot of people have actually paid 5%, 7%, 10% over list price. We see that a lot of times. But then you have also other listings that are selling 3 or 5% below list price. So the seller is reducing the list price before they're getting an offer. So not everything is selling over list price, but on average 102.3%. For context, before COVID, we were always in the 95-96% range, so there used to be always room to negotiate, and you would set your list price a little bit higher and then get negotiated down. Totally outdated strategy, does not work anymore. You need to be priced correctly, and then the market will respond here in this way. So what can we expect for the next weeks here in for the Milwaukee area? The economic outlook is, quite frankly, relatively uncertain. I don't know what to make out of it, but I'll continue to monitor the impact with accepted offers actually on a daily basis, but also on a weekly and monthly level, and we'll keep an eye on it, and I'll keep you posted what's going on. So far, it looks like Milwaukee will remain very competitive. We just have a lot more buyers than we have sellers, and that keeps upward pressure on prices, that keeps competition high. People are competing, especially for those nice listings. So May will remain competitive for sure, probably even June, July, and beyond from what we can see today. We're possibly seeing more cash offers as people liquidate stock portfolios. That is something that we've seen in the last few weeks. It makes sense to me that if somebody has money in the stock market, they're saying, you know what, it's very volatile right now. I'm not sure where it's going. Mortgage rates a little bit on the high side. Might as well take the money out of the stock market and use that money to buy real estate instead of taking out an expensive mortgage with 6.75%. More spring listings in the next few weeks from a buyer side. This is very welcome. It's not going to be enough to change the dynamic that we currently have in the market, and we are nearing peak spring market here. If you're thinking about moving later this summer, let's talk now before you're getting ready. The earlier you get me involved, the more I can help you strategically getting your house ready. If you bring me in a week before you want to list your house, there's only so many things that I can do at that point, of course. But so the earlier you bring me in, the more I can help you to brainstorm and think about different things. And of course, there is no obligation to such a conversation. You can just go on my website, onpointrg.com, click on that red thing that says book a call with Marcus. You can see my schedule, and then we can hop on a Zoom call or on a phone call and have a chat about whatever your situation is. The other question is always, how do you compete successfully as a buyer is in a market that is as aggressive on some listings as it is right now? It's always hard to gauge, is this a listing where we need to make an aggressive offer, or is this a listing where we can negotiate, or can we play with the terms to offset price? So there are a lot of possibilities, and we monitor the data for a good reason, so we can tell you what most likely is going to be a successful strategy here. Book a call with me. You can just go on my website, onpointrg.com. That's all I had for you today. Thank you very much for watching, and I'll see you at the next one.